In today's show, Bitcoin just got rejected at 19,600, while the altcoins failed to break out as well. In today's show, I'll be discussing why Bitcoin suddenly dropped $500 and what the main catalysts are behind that, as well as when Bitcoin is likely to break this critical $20,000 resistance, which we've all been waiting on. Also in today's episode, Rich Dad Poor Dad author Robert Kiyosaki explains why the Bitcoin price will see $50,000 next year. Checking out his latest tweet, glad I bought Bitcoin, next stop, $50,000. Wall of institutional money coming 2021, buy below, 20K. Also in today's episode, breaking news, Bitcoin faces a $600 billion catalyst, according to JP Morgan strategists. That's right, according to their new note, a 1% allocation from pension funds and insurance firms in the US, Eurozone, UK, and Japan would amount to $600 billion moving into the king of all crypto. We'll be discussing this here in today's show. Also in today's episode, we'll be breaking down the latest charts updates from Plan B, the creator of the stock to flow model, as well as some food for thought right here. If you invested $1,000 10 years ago into Google, it'd be worth $6,000 today. Into Facebook, $9,000 today. Into Amazon, $22,000 today. Into Netflix, $34,000 today. Into Tesla, $159,000 today. And if you would have invested just $1,000 10 years ago into Bitcoin, today's value would be worth $237 million. Let that sink in. In today's show, we'll also be taking a look at the overall crypto market. As you can see, Bitcoin is back on the climb along with most of the major altcoins. But where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button. That's right. And turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to discuss today, so let's dive right in, shall we? Bitcoin dipped by more than $500 after failing to break above 19,600 just a few hours ago. Most altcoins mimicked its moves, with Ethereum taking an unsuccessful swing at $600 before retracing to $580 after last week's price drops, where Bitcoin bottomed at 17,500. The cryptocurrency went on a tear and recovered its losses, and during the weekend, Bitcoin broke above 18,000 and then $19,000. The bulls kept the momentum going in the past 24 hours as well. They drove the primary digital asset to its highest level since early December, hitting $19,550 as it failed to surge above 19,006. However, Bitcoin couldn't continue north, and the following rejection dumped the asset to 19,100 within minutes. And despite bouncing off, Bitcoin is still currently trading at around $19,200 at this time. The technical indicators suggest that Bitcoin needs to decisively overcome the first resistance at 19,400 before potentially reaching the next one at $19,920. From that point forward, the asset could find itself in uncharted territory above $20,000, reaching that price discovery mode. When do you feel the Bitcoin price is likely to breach this 20K resistance? Do you feel it will happen this week, potentially this weekend, next week, before the end of this year? Let me know in the comments right down below. On the other hand, 18,800, 18,500, and 18,300 are the support lines in case Bitcoin's retracement continues. So those are the levels you want to keep your eyes out on this week. Now let's discuss the altcoins. The alternative coins have also had a volatile past several days. They copied Bitcoin with massive price drops and fast recovery sessions during the weekend. In the past 24 hours, Ethereum initiated an impressive leg up that drove Ether to just shy of $600. However, the second largest digital asset failed to overcome the psychological line and dropped to about $580. Also, Ripple continued its struggle since the Spark FLR airdrop snapshot on Saturday. Despite briefly spiking above 50 cents, XRP has retraced and currently sits at about 49 cents. And Binance Coin and Cardano have gained the most from the top 10, BNB up 3%, as well as ADA up 2.5%, and Chainlink and Polkadot have dropped by approximately 1% to $12.60 and $4.90 respectively, while the lower and mid-cap altcoins have also displayed unusual stagnation on a 24-hour scale. And before I break down our next story of the day, Rich Dad Poor Dad author Robert Kiyosaki explains why Bitcoin will see $50,000 next year. And before I break this down, let's first take a quick look at the overall crypto market. We can see Bitcoin up 0.79%, trading just below 19,200. We have Ethereum up about 1%, trading just above $586. We have Chainlink up 1.6%, trading at $12.73. XRP, one of the only major altcoins in the red today, down about 3.5%, trading just above 48 cents. We have Cardano up almost 2%, trading just above 15 cents, and Polkadot up 5%, trading above $5. All right, now let's break down our next story of the day, shall we? The Bitcoin price is heading to $50,000 in 2021, says the best-selling author of Rich Dad Poor Dad, Robert Kiyosaki. Kiyosaki pinpointed that a wall of institutional money is coming to Bitcoin in 2021, which could push the price up further. So why is Kiyosaki talking about institutional interest into the king of all crypto? Let's break it down. Kiyosaki, who is also a real estate agent mogul and an investor in precious metals, has historically liked various stores of value, including silver. Based on the institutional inflow into Bitcoin, Kiyosaki noted that Bitcoin below $20,000 is ideal, as $50,000 is the next target. He shared the following on crypto Twitter: "Glad I bought Bitcoin. Next stop, $50,000. Wall of institutional money coming 2021. Buy below $20,000." And he continues, "If you missed Bitcoin, buy silver. Silver set to move due to AOC's Green New Deal. America in trouble. Future bright for gold, silver, Bitcoin, and entrepreneurs." Now, this has received a lot of controversy. As Bitcoin Tina points out, silver is nothing more than an industrial metal. Any monetary value that it retains will be lost. I would not own silver. Gold will be much worse and lose all monetary value in the next 10 to 15 years. Bitcoin will crush gold. And I also like to point out that even Max Kaiser is calling silver the new aluminum. And if you read the Bitcoin standard, you'll understand very precisely why Bitcoin is so much more superior than precious metals, including silver and gold, as Bitcoin is the hardest form of sound money in existence with its 21 million limited supply, whereas gold and silver, there's new precious metals introduced to the market every single year, which dilutes the value of the precious metals, just like inflation with the US dollar. Just saying. But in comparison to the US dollar, of course, gold and silver are so much more superior than fiat trash. However, when you compare the king of all crypto to gold and silver, there is no comparison whatsoever, as Bitcoin is a better version of gold than gold itself. Just saying. So do you agree more with Bitcoin Tina or Robert Kiyosaki? Let me know your thoughts in the comments right down below. Now, if Bitcoin hits $50,000, its market cap would reach 928 billion, not million, which is around 10% of gold's market cap compared to the current 2.9%. Now, Bitcoin is in a favorable position to rally in the upcoming months because of its low correlation with the stock market. Traditional safe haven assets like gold often pull back when the U.S. equities rally. In the case of Bitcoin, it has shown a relatively low correlation with U.S. stocks, which is definitely a great bullish sign for the king of all crypto. Hence, Bitcoin has seen sharp uptrends even when equities increase in value. As you can see right here on your screen, this shows the S&P 500 with gold correlation with Bitcoin over a 90-day period. Bitcoin rallied in tandem with gold while the Asian market slumped and the U.S. stock slightly retreated, according to market analyst Holger, who shared the following on crypto Twitter: "Asian stock retreated with European and U.S. futures after a mixed Wall Street session amid caution over econ risks from virus-related curbs and ongoing U.S. fiscal stimulus talks. Bonds gain with U.S. 10-year yields at 0.9%, dollar steady with the euro at $1.21, gold rises to $1,839, and Bitcoin at $19,100. So while the lack of correlation between Bitcoin and the U.S. stocks likely comes from two factors: first, when risk on assets increase, Bitcoin benefits from an overall rise in investor appetite. Second, stocks have increased in recent months due to unprecedented central bank liquidity injections. Relaxed financial conditions benefit Bitcoin because investors move to hedge against inflation. As Michael Saylor calls it, a melting ice cube with inflation and money printer continuing to go brrr. And we also have Biden openly speaking about printing another $7 trillion in stimulus. Where does all this money go? I can tell you where it doesn't go: to the people. That, my friend, is a fact. Next, we have the CME and Grayscale trading activity continuing to surge, another bullish indicator. The CME Bitcoin futures market open interest is hovering at above $1 billion, just behind OKEX and Binance futures. The data shows that institutional demand for Bitcoin is high, to the point where institutional focused platforms are surpassing major retail exchanges in open interest and trading volume. Grayscale also just recently shared they just surpassed $13 billion in assets under management on December 15th, indicating a large increase in institutional inflow into Bitcoin, as Barry Silbert points out right here. $13 billion, in which $10.8 billion is within the king of all crypto. Now, institutions appear to be rapidly accumulating Bitcoin. You can say that again, following the highly profile publicized investments from the likes of MicroStrategy, Square, as well as MassMutual, who recently announced purchasing $100 million into Bitcoin. Subsequently, as Cointelegraph reported, this has led to an aggressive dip buying in both the futures and options market. All right, now before I break down our next story of the day, Bitcoin faces a $600 billion catalyst, according to JP Morgan strategists. Let's first take a look at the overall crypto market cap, sitting at $564 billion, with $108 billion in volume in the last 24 hours. And current Bitcoin dominance, according to CoinMarketCap, is sitting at 63.5%. And now checking out the top gainers within the top 100. Wow, surprisingly, we have Bitcoin Cash Trash up 8%, trading at $290. We have Nexo up about 3%, trading at 52 cents. Algorand up 7%, trading just below 33 cents. And Decentraland up 8%, trading at 9.1 cents. And now checking out the biggest losers within the top 100, we have XRP down 3.5%, trading at 47.8 cents. Filecoin down 1.5%, trading at $29.50. And Dogecoin down 0.4%, trading at 0.003. Now, out of this list of the biggest gainers and losers, which altcoins do you have your eyes on right now? Which ones are you watching and most bullish on? Drop me a comment right down below. And now checking out the Binance margins, we can see the bears are barely in control, leading with 50.3% shorts versus 49.6% longs. Are you currently bullish or bearish on the king of all crypto? Holla at your boy. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 91 in extreme greed. Yesterday was a 95, last week a 95, and last month an 86, all of which is within extreme greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, like we're witnessing in the market right now, that means the market is due for a correction. All right, now let's break down the latest tweet from Plan B, who recently shared this chart update. Stock to flow time series only model. Bitcoin price, red dots, moves nicely towards the model line, which is the white line, just like 2017 and 2013. And I do see a little orange. Check this out. As you can notice, at the end of the red dots is where we're currently at, where you can see on 2021. And that big fat white line represents about $100,000. That, my friend, is where we are heading in 2021. I like to point out that the Stock to Flow X model predicts a $100,000 Bitcoin price by December of next year, right in time for Christmas, to make it a very merry Christmas. Just saying. It also predicts a $288,000 Bitcoin price, medium average between the years 2020 and 24. Let me know if you agree or disagree with this Stock to Flow model. And now checking out this tweet right here from Sean Puri, who wrote, if you invested $1,000 10 years ago into Google, it'd be worth $6,000 today. Into Facebook, $9,000 today. Into Amazon, $22,000 today. Into Netflix, $34,000 today. Into Tesla, $159,000 today. And if you would have invested just $1,000 10 years ago into Bitcoin, today's value would be worth $237 million. Let that sink in. And now for the $1 million question, which one would you invest $1,000 into and hold for the next 10 years? Let me know your answer in the comments right down below. And as eCoin Metrics points out, Bitcoin is one of the largest potential for growth over the long run. That's thanks to Bitcoin being in the business of money. That's a fact. All right, and before I break down our final story of the day, Bitcoin faces a $600 billion catalyst, according to JP Morgan strategists. First, I want to remind you to smash that show more button right below this video for a detailed analysis of what's going on in the market. This goes for all 630 plus videos right here on my YouTube channel. I also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also, be sure to smash that subscribe button right below this video to receive daily crypto news alerts every single day, just like this. It also helps support the channel, and I greatly appreciate your continued support. You can also follow us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on crypto Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs just like yourself from all over the world. To join it, click this link, request to join. I'll be sure to plug you in. All I ask for is that you have a profile picture. Those with no profile picture will not get approved because I hate spammers, and typically spammers are the ones with no profile picture. So just saying. And for those of you active on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day, shall we? The Bitcoin price has been on a stunning rally throughout 2020. You can say that again, rising from 3,600 in March as a result of the pandemic to hovering over $19,000, 900 and change in December. And the longer term, JP Morgan strategist says a $600 billion catalyst is potentially awaiting the dominant cryptocurrency. According to a note from JP Morgan strategist, a 1% allocation from pension funds and insurance firms in the US, Eurozone, UK, and Japan would amount to $600 billion. Now, currently, the market cap of Bitcoin stands at around $356 billion, making it larger than the largest banks in the world, including JP Morgan Chase. Now, if Bitcoin sees an influx of buyer demand that is larger than its current valuation in the next several years, which we will see, just saying, the probability of exponential growth increases, so expect more exponential growth. The optimistic stance towards the Bitcoin price from JP Morgan comes after MassMutual recently purchased $100 million worth of Bitcoin. If you missed the memo, check out my previous episodes where I cover this in great detail. And as Forbes previously reported, MassMutual, one of the largest insurance companies in the United States, invested into Bitcoin. The conglomerate has over $675 billion in assets under management based on data from 2016. And according to Michael Novogratz, this is the most bullish news of 2020, considering this is going to continue to increase the domino effect of major institutions allocating into Bitcoin. MassMutual's accumulation of Bitcoin is much more significant than a $100 million institutional buy order. That's a fact. It set precedent across the insurance and the pension fund sector that Bitcoin is a legitimate store of value. Bitcoin is special because it can act as both a store of value and inflation hedge while exposing investors to exponential growth. Now, typically, hedges against inflation are like insurance for a portfolio against potential downside risks. They are not there to drive gains, but rather protect gains from losses when the market turns. And although Bitcoin price can undergo massive swings in the short term, its long-term outlook remains bright due to its valuation gap with gold. That's right, Bitcoin is still in the nascent phase of growth because there is a massive valuation gap between Bitcoin and gold. The gold market cap sits at around $9 trillion, and Bitcoin accounts for less than 4% of that currently. Now, MassMutual's Bitcoin purchases represents another milestone in the Bitcoin adoption by institutional investors. One can see the potential demand that could arise over the coming years as other insurance companies and pension funds follow MassMutual's example. The note from JP Morgan strategist read, that's right, another compelling characteristic of Bitcoin is that it could rally in tandem with risk on assets when the market sentiment brightens. Hence, investors consider Bitcoin as a safe haven and an inflation hedge. It could increase with stocks. For instance, stocks have started to see a small recovery in after-hours trading as the vaccines and fiscal stimulus drive risk on appetite. As wealth market analyst Holger points out, global stocks start a busy week with small gains as investors look for vaccine-led recovery, plus U.S. fiscal and Monday stimulus, bipartisan $908 billion U.S. relief bill to be unveiled, pound jump as last gap extension to Brexit talks dodge hard divorce, bonds down with U.S. 10-year at 0.91, and gold at $1,834, Bitcoin above $19,000. So there you have it. And now for a quick recap of what I covered with with you right here in today's show. Bitcoin fell short at 19,600 while altcoins failed to break out. I shared with you the latest Bitcoin technical analysis and what to watch out for this week. Also in today's episode, I shared that Rich Dad Poor Dad author Robert Kiyosaki explains why Bitcoin will see $50,000 next year, as he shares in this tweet. Glad I bought Bitcoin. Next stop, $50,000. Wall of institutional money coming 2021. Buy below 20K. And I also shared with you the latest chart update from Plan B, the creator of the stock to flow model, who wrote, chart update, Bitcoin stock to flow time series only model. Bitcoin price, red dots, moves nicely towards the model line, which is the white line, just like 2017 and 2013. And do I see a little orange? It looks to be that way. Now is the time, my friend. Also in today's show, I shared some food for thought. If you invested $1,000 just 10 years ago into Bitcoin, today it would be worth $237 million. Also in today's show, I shared that Bitcoin faces a $600 billion catalyst, according to JP Morgan strategists, as institutions are more bullish than ever. So where do you feel the Bitcoin price is likely to go from here? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. In the meantime, let's sit back, relax, grab yourself a crypto cocktail, and let's watch this Bitcoin price go straight to the moon. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description and go ahead and register for this free system. You'll be glad you did, and I look forward to seeing you on tomorrow's episode. Peace.